All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Markets off and rolling here. Not a whole lot going on. It's pretty stale out there this morning. S&P is what? Uh, yeah, point 0.4 higher, point oh 0.07 higher. We saw a pretty flat night last night, a little bump up this morning, but the market has faded that here just a little bit. Just not a whole lot of pin action out there. We do see, FedEx earnings, which we're going to talk about here. We still have Netflix, with a nice run continuing there on that stock. And then some of the recent laggards like Boeing and Facebook popping up here, this morning a little bit. Now, the challenge is in gold, GLD. The stock price on GLD is still at 139. And it is one of those where I'm slightly red on the option, but slightly green on the stock. And so I've chosen to stay in the position here and going to continue to stay in the position. Not going to move on out of that here. We'll hold that. Let's kind of fill in the price here with that on the challenge sheet. But let's see. Price is 167. So 167 here, and basically it's we're down $84 on it. It's time decay, lost there on it, and a little bit, as is expected for anything that really isn't moving. Just simply is not moving, still still a good chart. Still a good chart, and something that is still within the challenge parameters based on the stock price. So, going to continue to hold there. Now there are no new signals on the board right now, but if we look at the crossovers here today, you can see Arconic, FedEx, GE, Whirlpool. FedEx doesn't have a chance to signal. Gap down is huge on the earnings, but we have three on the board there with potential. And then if we look at the upside crossovers, we have Dollar General, Facebook, Juniper, and Twilio. And none of them are triggering this morning, but Twilio has a chance to trigger here this afternoon. We saw a 3-7 crossover on, on Monday, but didn't trigger. Yesterday we saw a downside 3-7 crossover, but didn't trigger. Today we're getting a little upside action. Could easily see a trigger by the close here today with Twilio. And then Facebook, this is one that's just kind of moved a little too far too fast to give us a nice trigger. But very interesting. This is a stock that when the market rallied, last week, had its 2 big days, the stock was down big both those days, right? And, now with the market kind of stalling out a little bit, Facebook leading the way. That is a bull market. That is bull market characteristics, and we do see that playing out with Facebook here. So nothing to adjust to here this morning, but some potential here this afternoon. Now this afternoon I'll jump on, make any challenge trades that are needed. I will also be talking about Trader Minute into the end of the year and the beginning of January, what the upcoming schedule is, plans for the challenge, plan for the holiday season. And we'll map that out and show you what we have going on there, and go from there. All right. So that's the challenge, and continuing to hold gold, right? Continuing to hold gold. Now, this morning, yesterday after the bell, we saw FedEx and FedEx earnings, and this is a story we've talked about now for a year and a half. Where we saw FedEx earnings really start to fall off, and some warning signs come into their earnings last year. And, we saw the stock just fall precipitously here in December of last year, go from that 230 level down to the 150 level. I mean, that for a Dow stock, that's just a huge move. And, last earnings quarter, we talked about it and the possibility of it being a bottom, but chances are we're going to see it drift lower, snap on back, be somewhere in this gap ahead of the next earnings. And that's where FedEx was. It was in this gap ahead of the earnings here last night. And these earnings are going to matter for it. And they're going to mean a lot for FedEx going forward. And FedEx came out. They missed on their revenue. They missed on their earnings. Their conference call was pretty sour if you're an investor, right? But the question with FedEx comes, okay, are they at a bottom? FedEx said so last night in their earnings call. They said the company's at a bottom. If they're at a bottom, right? There's a long way up that we can see it go based on valuations, right? So are they at a bottom? Do we have any signs that okay, this is a bottom? While back, Walmart, 2016, and it was this earnings report right here. Let me highlight it for you. It was this earnings report right here. Walmart came out and they basically kitchen sinked everything. They said, "Look, we're not as competitive as we need to be. We need to make some changes. These are the changes we have made, and you know what? We have no earnings guidance for the rest of for the next year because we're in transition mode." And the stock got sold, and we talked about it then. That they kitchen sinked it. There's no more bad news. They to go lower is going to be very difficult for Walmart, as their valuations are very compelling, and there's now no expectations. And we have seen that as Walmart has shown this transition, the stock has performed very well over the last few years. Do we have that possibility with FedEx? To me, is the question. And with FedEx being a challenge stock, is it something that I can expect to run, to rally, to drop? What is it, right? Well, let's go see. Here's FedEx, and I'm going to chart some of the fundamentals here for us, and let's go with let's start with price to revenue or price to sales, right? Which is a really good valuation metric, okay, for a company. And you can see the price to sales is here at 0.55. This is the lowest price to sales that FedEx has been since 2011. And if we go back even further, his historical data, the last time it got this low was the market crash there in 2009, right, when the market hit the bottoms. So we're talking about a price-to-sales ratio on FedEx that is incredibly cheap and says, look, there's good value here, right? What about price to earnings, right? Another valuation metric, a PE ratio, right? Let's just go back the last 10 years. You see the price to earnings has skyrocketed here to 92. This is a stock that's been going down, yet the price of the stock relative to the earnings has been getting more expensive. What's that tell you? It tells you their earnings are eroding, right? So not cheap from a PE ratio standpoint. If we go to price to book, right, which, for some companies matters, for other companies, not really. FedEx is one of those where not really, right? The stock just kind of moves, with the price to book is, the price is changing, book value not really changing all that much. So, not a very relevant metric. So price to sales, pretty darn cheap. Price to earnings, not very pretty. So, can we make a valuation, a valuation argument for it? We could. I look at it as, the stock is cheap, right? The stock is cheap, but it is one where I can't look at the valuations of it and say, oh man, this is just a no-brainer to buy because of other factors, right? If we look at the dividend yield on it, right, the dividend yield's 1.76. we talked about AT&T earlier this year, and hey, there's this bad news and this bad news and this bad news. All this bad news on AT&T. Look at the dividend; it's huge. Chances are the bad news is priced in. Investors are going to be jumping in on that dividend, and that's what we've seen play out this year. But FedEx doesn't have anything like that. Right? So when it comes to FedEx and looking at the direction of the stock going forward, it's going to be reliant on revenue, on margins, and on earnings. We're going to need to see them, change or, have everything priced in, all the bad news priced in. Concerned me last night when I went through the FedEx conference call to see FedEx, basically say, hey, we're at a bottom. But at the same time, they use this term uncertainties ahead, right? And, Walmart did that. They said there's some uncertainties ahead. But with FedEx, they seem just a little bit more, we didn't really catch and sink it. We're just kind of hoping a few things kind of turn around for us in our favor. And if you look at kind of the way China is going with FedEx, right? China was a big growth area for FedEx, but with the trade war stuff, that has cooled. Amazon is pretty much trying to, nudge FedEx out and do their own shipping. In fact, Amazon announced that Prime purchases, will no longer be able to have the option to be shipped via FedEx Ground. So lots of negatives there, right? Lots of negatives there. So what do we want to see, right? When we have a company with a ton of negatives, we could talk about all the elements there, till we're blue in the face, and they don't quite matter. What matters? Well, what are the expectations of the stock, and do they have a decent chance of breaking investor expectations, either positively or negatively? And one of the things we talked about going into this earnings, or last earnings, that this next earnings was going to be a show me time. That if they were able to show, look, we have made this transition, the stock's going to be rewarded in a big way. If they don't, investors are going to grow tired of it again, and we're probably going to see another few quarters of negativity here for FedEx. One of the big issues for FedEx is their profit margin. Their profit margin's down to 0.55. The profit margins, basically, so the amount of money they're making per dollar put in, it just continues to crater. It's gone from 7% down to 0.55. 0.65. It's a nasty profit margin. Now, the operating margins, they haven't fallen to the same degree. Okay, and the revenue here is continuing to climb, right? The revenue, it's not like the stock is cratered as revenue has, cratered, but they've lost the revenue growth. This situation tells me, look at the comparables. Look at the comparables. Are the comparables easy for the market to digest, or are they difficult for the market to digest, right? The market doesn't always go off of, hey, you know what, this stock's doing good, this stock's doing this and this and this, or it's doing bad because this, and this. It looks and goes, is it improving or is it weakening in some of the key metrics, right? If we come in and we look at just a revenue standpoint here for FedEx, you can see the revenue miss right here. Miss on expectations this quarter. And if we go back prior quarters, 1, 2, 3, 4, to last year at this same time, you'll notice that revenue was significantly higher. So what's gone on with revenue? Revenue has fallen, right? The overall revenues, the comparables there are negative. Okay. Well, let's look at next quarter. Next quarter, we had a year ago, we had revenue down here. Next quarter, revenue is expected to be right here. That's a positive, right? That's a positive comparable. The next quarter versus the expectation, slightly down. The next quarter relative to expectation, very positive. Next year, expected to be positive. Now, all these can be adjusted. But if we start to look at the comparables here, very nasty comparable right now. Next quarter, okay, decent, but the quarter after that, still negative. So it's one where the comparables are not set to improve, which tells us what? It tells us this is not going to be a very enticing stock to investors. Investors are not going to be able to look at this and go, well, you know what, this is a company that's just going to have 10% revenue growth quarter over quarter, this next quarter. They're just not. And this type of situation is not a buy situation for investors. Well, let's take a look at the earnings front, because that's revenue. What about earnings? Well, from an earnings front, here we are this quarter. If we go back 1, 2, 3 to 4 to last year at this time, big drop in earnings. If we go to next quarter, same, negative comparable. Next quarter, same, negative comparable. The next quarter, okay, a flat comparable, and then the quarter after that, meaning next year, that's when we start to see the comparable look better. That's when we start to see the growth come in. That's assuming that, FedEx is accurate with their numbers, and obviously these numbers will change over time and adjust. But when we look at all the numbers on the table, this isn't a Starbucks story. This isn't a Walmart story where they've gone down because the comparables have been difficult, and now the comparables look great. This is a story where the comparables still look ugly, where the margins continue to look ugly, and where they have a competition piece out there that is very significant. In all, what's my expectation? In all is, look, investors are going to sell this further. There's a stock that could go below 100, right? Which is pretty hard to imagine considering it was trading up above 230. But, this is a stock that in the coming year, irregardless of what the market does, could trade well below 100. And I'm not going to expect a bottom to be in until we see the comparables change. And so far, there's no sign of any real major change with those comparables, even though the company says we're at a bottom. The numbers don't reflect it. So, as we go forward here with FedEx, for the challenge and all of that, it's something that hasn't given any signals here this quarter. We came off of a bottom, and then it's just kind of been chop city since. But this is something I would not be surprised in the coming quarter to see some significant downside signal come in and, be playable and very profitable going forward there. It's not a stock that I expect to trade within this earnings gap by the next quarter. But the stock, trade up to 167, 168, before dropping further, sure. But I do not expect it to kind of do what it did last quarter. I expect it to be at a low. And it's one where going into the earnings next quarter, let's say the stock is at a low, a new low, and going into next quarter earnings, I probably want to be a buyer. Based on obviously it'll depend on option pricing, but based on the expectations that will likely be going into the next earnings, probably want to be a buyer there of FedEx. So that's that's FedEx. I don't think this has any bearing on the overall market. I do not think we can look at FedEx earnings and say, well, this has a negative read for this sector, or that sector, simply because of what's going on with FedEx. This is a FedEx story. This is an operational and execution story that has been poor. If you look at how FedEx has performed, right, over the last couple years, you can see down, down, down. but you compare that to UPS, and UPS is sitting near all-time highs, right? So this is one where this is a FedEx story, not necessarily a sector story or a market story here for it. Okay. So anyway, that's FedEx, and will remain on the challenge watch list. I'll talk about it a little bit more here this afternoon as I talk about the challenge going into next year. But hopefully that helps kind of give some perspective there. With FedEx. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you later. Take care.